New highs across the board recently. Let's talk markets with Amy Wu Silverman, RBC Capital Markets, head of derivative strategy. We've had a lot of our favorite technicians on. They're dead wrong. We've had a lot of, the fundamental people are wrong most of the time anyway, but most of the ones we've had on, no one was looking for a quick rebound from the April lows to all-time highs. And then, more of the same talk about revisiting the lows and the momentum's waning, and it's not, here we are. Did you think we'd see it this quickly? What were you? I remember when you were on, you were talking about, you look to see whether there's hedges for either, continuing upward moves or downward moves. Were you seeing something that indicated we get back so quickly to all-time highs?
So I'll tell you, the thing that the options market has been saying pretty consistently is short-term, relatively complacent, didn't see those hedges, but longer term, when you think about that term structure, Joe, still has remained high and sticky. And to me, it's always two things. It's kind of timing, and then it's positioning. And, the narrative has been, retail's been kind of right on this, buying every dip, even through Liberation Day, and institutional investors remain wary. And essentially, what I think has continued to happen is you get caught off guard, and you think about every single instance like this since COVID, and what's the risk? The risk has almost always been to the right tail, to not jumping in quickly enough, to not participating, which is why I think that rally from Liberation Day was so fast and furious.
We're in July, which is a great month, almost always, but it's also liquidity is much thinner, and you say that there's pothole. What do you call them? Volatility potholes or something?
Volatility potholes, yeah. For someone who doesn't drive, I like driving analogies.
You don't drive. You let other people. You have a driver.
Well, I've been living in the city for 20 years, and soon, robots are going to drive us around, so I haven't kept up on it. They
may still hit the potholes.
That's true. That's true.
So it could be anything, and that would cause, a little bit of a drawdown, but does the overall momentum still indicate higher prices?
It always makes me think, where did we sit a year ago? And if you remember, August 5th, we had that huge volatility pothole.
What was that one?
It was, that's the funny thing, right?
An economic indicator?
The fact that you kind of are like, wait a minute, what was it? Kind of tells you
I'm trying to remember what happened last. I like that.
I hear you.
What happened yesterday. So.
No, I hear you. It was basically poor economic data, but what was interesting about it is you had essentially the same situation you're kind of having now, which is typically seasonally lower volatility month, lower liquidity, folks are on vacation. And so what was surprising about it, this was also related to the yen unwind, but it was the idea that, why would this one thing create this huge spike to, VIX in the 60s? I think we're at risk for something like that happening again this summer. But what I think investors have learned is when you get those potholes, you actually use that to jump back in. So you get that velocity just like you did on April 2nd and you did August 5th of last year. But then what have people been trained to do? You jump back in because that was your opportunity that you didn't get when you missed the momentum from a few months ago.
Now I'm remembering. That was the highest the VIX got.
For a long time. Yeah, since 2020, essentially.
Right. And it was nothing compared to, Liberation Day or or at least didn't seem like as big an event as we had, and that was just economic worries.
It was, which essentially triggered, and to me, a lot of it, honestly, was this liquidity vacuum that we are now, to be clear, going into. July, August tends to be when, the market makers, they're there, but it's not necessarily the people who are usually the ones doing it, and so I think you're at risk for those volatility potholes, but I think what's interesting about it is for some institutional investors, this may actually be the opportunity that they have missed since Liberation Day, since we got that big rally post the big sell-off. And perhaps, when you think about positioning, it's not as intuitive as I think people think with just the nervousness around hedging.